Mr. Wynaendts, today Aegon announced another improved quarter in terms of sales and earnings. Could you talk us through the key drivers here?
We are indeed very pleased to announce a strong set of results in terms of earnings, in terms of sales, but also in terms of having a strong capital position. And what we're seeing here is that the efforts we've really put in place in the last couple of years to transform our business are paying off. So let me just take you through the different items, starting with earnings. The earnings are up around 29% compared to the same quarter last year. And this is the result of strong business growth. We have had benign market conditions, but it's also reflecting the efforts we've been making in further reducing our expenses. At the same time, what we're seeing is our sales are also growing with 36% compared to the same period last year. In all segments of our business, we're seeing an increase in sales. And I'm pleased to see that the demand for our products is increasing. And I'm not really surprised because our customers are looking for this financial security which we're offering. You see it in life sales, in deposits, where people are saving for the future. In terms of expenses, as I mentioned we've been very successful in further reducing our expenses, and on a like-for-like basis, our expenses were reduced by 6% compared to last year. In particular in the Netherlands, as you know, we've announced a cost reduction program of 100 million to be achieved before the end of 2013. And I'm pleased to share with you here that 89 million of that 100 million has so far been achieved. And we still have the remaining of the year to do more. And finally, in terms of our capital position, which as you know has been at the core of our strategy, to have a strong capital position, we have achieved a core ratio of in excess of 76%, to be exact 76.7%, which is higher than our target minimum of 75%. Same time, we're holding a significant amount of cash at our holding, around 2 billion euros. And that is also why we're able to announce an increase of our final dividend of 11 cents compared to 10 cents in the previous year.
I'd like to now turn to your other announcement of today, and that is your decision to cancel all preferred shares. Would you talk us through the basis for this and what it is you aim to achieve?
This is indeed an important announcement we're making today. And what we're announcing is that we have reached an agreement with the association, as you know, a larger shareholder, to cancel all preferred shares of which they were the sole owners. And we're doing this for a number of reasons. First of all, these preferred shares will in the future, under the new regulation, not anymore qualify as Tier 1 for Aegon. At the same time, the association, as you know, has an amount of debt which needs to be refinanced, has to refinance this debt this year because that's the agreement they have with the banks. And that's why we've chosen this moment to do this transaction, because we're taking advantage also of the environment in order to ensure that the interests of all stakeholders are safeguarded.
That's very clear. However, what is the impact on your common shareholders?
Well, our common shareholders will now have shares in a company which has a simplified capital structure and a capital structure that is sustainable going forward in the new world of Solvency II. The structure takes into account the fact that there has been some dilution, but what I would like to say here is that the dilution has been offset by the fact that Aegon has contributed directly an amount of 400 million euros into this transaction, the result of which is that the earnings per share dilution has been limited to just around 3%.
During the quarter, you also announced a couple of smaller acquisitions in the Ukraine and Romania. Is this an indication that Aegon is again expanding?
Well, Central and Eastern Europe is a key growth area for Aegon. And we had the opportunity to make an add-on acquisition in Romania, which effectively is leveraging the platform we have. That puts us now in a position of being number 3 in the market for the pension business. And at the same time, we also had an opportunity to do an acquisition in Ukraine. It was a company we liked, with a management we liked, in a market which we believe is going to give us long-term growth opportunities. Ukrainians also need insurance, and therefore it is important that we are present in these markets, which are going to give us long-term opportunities to grow our business in that part of the world.
Spain, as we all know, has been going through considerable consolidation in the banking sector and obviously has an impact on your business. What are your plans long-term for the Spanish market?
Well, we've been very clear in saying that we do like the opportunities for the long term in the Spanish markets. We do recognize, however, that Spain is now facing significant difficulties. We're also seeing a consolidation in the banking sector. A number of the smaller players, the savings banks called the cajas in Spain, clearly are undergoing a restructuring. Some of them get taken over, others merged, and as a result of which we have exited now 2 of our agreements. One was with Civica and the other one was with Unim. But we're also very pleased that we've been able to expand our presence in Spain through a distribution agreement with Banco Santander, the largest bank in Spain with over 5,000 branches. And that gives us, in our view, a great opportunity to grow together with Santander our life insurance business in the whole of Spain. And I'm convinced that Spain, on the long run, will remain and will become an attractive market for Aegon, for life insurance and for pension products.
In an age when the role of intermediaries is changing due to new regulation in the UK and the Netherlands, what are you doing to adjust your business models, given that traditionally about 80% of your products and services have been sold through intermediaries?
We indeed see a lot of changes in the market, and I think the most important change we see is that there is a need for us as an insurance provider to get closer to our customers, to connect with our customers. And we can do that ourselves, but we can also do that and will continue to do so with the help of our intermediaries. In many cases, the products and services which we're offering are complex and they need advice. And that's when the intermediary plays an important role. And what we'll be focusing on is in improving our capabilities to dealing directly with our customers, while at the same time also improving the way we support our intermediaries so that they can give the proper advice to our customers. And that's why I see a lot of things happening in our organization. Let me share you a few. In the US, for example, we're launching Transamerica Direct. That's a new capability which allows the customers to connect directly with Transamerica. In other parts of the world, we're launching different forms of digital distribution capabilities. As you know, in the Netherlands, we've shared that earlier with you, we have now a direct bank. And that's a bank that provides services to our customers which allow them to interact themselves and do much more themselves. So there are many examples, and the last one I'd like to mention is our proposition in the UK. That's a proposition on a platform which effectively is there in order to support intermediaries so that intermediaries can provide the right advice to our customers. At the end, it's all about making sure that we serve our customers better, that we do that in the way the customer wants it. That can be either directly, that can be with the help of an intermediary, and we as a company have to make sure that we provide that platform so that at the end our customers are best served.
Obviously a good set of results for Aegon. Looking ahead, can we expect this sort of positive news continuing?
Well, what we're seeing here is a strong set of results, and it's a strong set of results which we are achieving as a result of the transformation we've put in place. That means to have a clear strategy, a vision. We're focusing on being more cost efficient, but also investing in the future in those areas where we see that we can grow further, and we are growing further. So I believe that what you're seeing here right now is the momentum building towards further growth in the future, and a company that is going to be achieving its ambition of being a leader in each of its chosen markets. And I think we are confident, and not only as a management, but what I find very positive and very supportive is that I see that the employees also more and more understand the strategy, understand their contribution, and understand how they can contribute to make sure that this company becomes the leader in each of the markets we have chosen to be in.